it appears that the rotation out of big tech is over, at least for today. And we're looking at how to navigate the big picture with the Yahoo Finance Playbook. Joining us now, Matt Stucky, Northwestern Mutual Wealth Management Chief Portfolio Manager. Matt, thanks for being here. So you heard us talking about some of the calls that are out today on some of the big tech companies. We had this rotation out of a lot of these names. How are you thinking about what positioning should look like for investors right now?
Well, thanks for having me. Look, we get the kickoff to big tech earnings tomorrow after the close with Alphabet reporting earnings. And really what I'm thinking about as it relates to our portfolios is kind of what are the relative trends into quarter and for the rest of 2024. And they remain very positive for big cap tech. Specifically, looking at just Alphabet specifically, it starts and ends with the health of the ad market, and it is quite healthy today. Just during the second quarter, Group M, which represents some of the largest ad buyers in the world, upwardly revised their 2024 growth estimate by over 2 points from 5.3 to 7.8%. And to me, that just shows you that the global ad market is recovering. And now within that, you'll have companies like Alphabet and Meta, grab not only that growth rate, but take some share above that. So that's being reflected by earnings revision trends that are quite healthy for mega cap tech. And to me, it's just more of the momentum from a business fundamental perspective is persisting as we get earnings released after the close tomorrow.
So Matt, so broadly speaking, it sounds like you look at big tech and you like some of the kind of the big themes and trends playing out right now. How does valuation look for some of these names, though, Matt? Just given some of the runs they've had.
Yeah, sure. That's the debate right now. It's full valuations versus strong fundamentals. In the shorter term, strong fundamentals tend to outweigh the valuation concerns. It's not until you start to see revision trends roll over, that's where the valuation concerns really come into the investor mindset. We don't think necessarily that it's going to be the case in the second quarter or in 2024. But if you look out further out, the valuation setup and concerns that investors are increasingly starting to have are a little bit more of a governor on what kind of upside is still left. But in the shorter term, fundamentals are kind of where we want to focus in on as we think about the upcoming earnings season for big cap tech.
So it sounds like you are fairly optimistic here, given what you were talking about with ad trends. But there's a difference, of course, between adding and staying pat and waiting for that potential earnings upside. And so I wonder if you were recommending that folks add to their holdings of mega cap tech, or if you think maybe they should be looking outside of those mega caps, but still within technology.
It's a good question. I would say that the best are getting better right now as it relates to specifically technology. Outside of technology, our firm, we do have a good view and a positive view on the relative valuation argument for things like U.S. small cap, U.S. mid cap as an example. And you saw just in the last couple of weeks that sharp rotation that can happen when you have negative positioning or a lot of investors underweight those asset classes. And a catalyst also involved in the form of back-to-backs, positive CPI prints. So I think that, using that analogy of positioning and fundamentals is kind of how you want to approach portfolio construction today. And, to that end, I would say, we're not necessarily advising our clients to plow more into mega cap tech. We are more so talking to clients about keeping a long-term investment horizon, which does involve maintaining investments in some of these large technology companies, but increasingly also leaning into some diversification sources, specifically U.S. small caps as an example.
Matt, I'm just curious too. We've been talking a lot about the CrowdStrike event. I wonder how much, as we kind of make our way, not just through big tech earnings, but just the earnings season in general. You think that just cybersecurity in general is going to become even a more prominent theme as we hear from these CEOs on the conference calls?
I think if you were to ask any IT professional that is responsible for making investment decisions for the technology stack of the Fortune 500 and what are their top three kind of major investment areas year in and year out. Well, right now it's certainly artificial intelligence, but right behind that every single year is security. And events like what CrowdStrike has just, brought upon the public in the form of a lot of IT headaches only reinforces that. While this wasn't, it sounds like something that was kind of more of a hack, it does show that you need resilient IT systems. And it's just another reminder that the spending profile on security and resilience for the IT stack across corporate America is going to continue to be an area of emphasis for every decision maker out there.